Hey guys, John Wick here. Welcome to my weekly markets review video where we analyze Bitcoin, SPX stock market, and gold. Now, before we get started, I do want to remind you that this video is brought to you by and sponsored by Prime XBT, where they offer leveraged trading on all different types of instruments from Bitcoin, gold, the stock market, and Forex. So please go check them out, guys. And with that said, let's get started. Okay guys, let's get stuck into it. So this is your chart of Bitcoin. This is your weekly chart. And the only thing that I've left on this chart is the support and resistance lines that we went over last time. When we were about over here, I mentioned that if we broke through the $13,800 level, that our next target would be the $16,100 level. And if we were happen to break through that we would climb in amazing fashion. And that's exactly what we did, right? We wicked above it, had some trouble, and then when we did break out, we broke out in amazing fashion. This past week, we have wicked down all the way. We had a correction, magically just touching, the 16.2 level again. And then, gracefully, we've had a good show for this week's price action in Bitcoin. So that is a good sign. So, conversely, again, if we fall, we break, I would say that, let's see, hold on. Let me get it horizontal right. I would say that we definitely saw some support at the 18.2 level, at the 18.2 level for sure. So we can draw that, I think, for the short term. So those are your levels right there, right? And then let's go ahead and draw one at the top as well for the resistance. Okay, so that's what I see here, how we're looking, right? This is your level here to the downside, and then at 16,000, and then at around 14,000. And I believe that we also cross-checked these two levels with fibs last time, a bunch of fibs, and they all played out for confluence. Okay. So now that we've got some downside, precautions, let's go and look for some targets. And it looks like I already drew it. I jumped ahead of you guys, my bad. But let me show you how I got that. And I believe it was a fib from the swing high to the swing low. Yep. And that brought me this level right here, right? And this is why everyone's looking at the $24,000 level. And I do believe that if we are able to break highs at some point and maybe retest the breakout of the high, the breakout of the all-time high, then I do believe that that is our next level in the sand, is the $24,000 level. I also want to show you something that was interesting. If you fib this from the swing high to the recent swing low, okay, that's also interesting too, right? So you can do it that way too and look at, about 22,500 level. Me personally, I'm looking at this $24,000 level. If we are able to break the all-time highs, I'm looking at it from an absolute move of the year, from the swing low here to the swing high. Okay, so let's go ahead and look at this on a daily chart. And the way I figured I'd structure this, guys, is I'd just show you just classical charting, right, with candlesticks and support and resistance levels and stuff. And then after that, we'll go over for all my indicators and see if we can find any other opportunities. And for those that have my indicators. So let's go to the daily. And over here too, right? Okay, so let's start off by measuring this little correction we have and put everything in perspective. Okay, so we had a drop from right there. It's right there. So you're looking at about a 9% drop, guys, that we had, this past week. Right, this drop that we had, it's about a 9% drop. Now, when we were going through 2017, for those of you that weren't with us, it wasn't. And let me go ahead and draw and put the high time frame on so I can show you some relevance here. So whenever we corrected in 2017, you can see here we just pulled back to the 20-day moving average and bounced off of it. But before, in the last bull market, we would correct all the way down to the bottom band before actually correcting quite a few times. I mean, this happened 7-8 times or such, right? So you have to also realize that this might eventually be a bigger correction, whether it's now or later. I don't foresee it being now, but I do foresee where when we hit about $24,000 that we might have a bigger correction, right? But if we had to have one here, because you always have to be ready, guys, a 30% correction, you know, would be right there. I think we said this last time, the confluence at the $13,800, or let's call it $14,000 zone. That's what you would look at for a normal correction if we're comparing ourselves to 2017. Now, again, we might be in a different setting, right, or atmosphere with the institutional money, but you know, you can't bet your dollars on that. You can just, you know, form your thesis and your bias and see if it plays out. But for now, it does look like all of the dips are being bought up, you know, who knows, by PayPal or Grayscale, but we're looking in a great spot. If I had to guess what's going to happen here, because that's what it is, it's all educated guessing, I would say that we probably find some consolidation here, right? Trying to break through the all-time highs. And then at some point when we're not able to, let me go ahead and actually draw this. So I suspect that we will go and we'll bounce up here, you know, do this a few times. And then after bouncing a few times, we'll see, you know, a pullback where it will hit this level, right? And then that's what we'll need, and maybe like a little double bottom, right? And then we break right through this level, right? And then correct, test the breakout, and then on to the races. That's kind of what I would envision happening with Bitcoin, right? But again, you always have to plan ahead and make sure that you know what you're going to do if it does have a 30% correction. You know, what time, at what point are you going to tap out? For everybody, that's different. It's very easy for people to say, okay, well, you know, you just always hold through a 30% correction. But, you know, that might be easier for someone like myself, you know, who has a cost basis, you know, much lower than for somebody that might have, you know, bought in the last $3,000 or $4,000. So always have a trade plan ahead of time, guys. Always have a trade plan ahead of time. And then on the 4-hour chart, you know, the same thing playing out. I do want to point out here, and let me take this stuff off the chart here. This is a pattern that I've posted on my Twitter past week that I've played on a few different assets, and I actually played this move. I think I posted this one. But you had a double bottom here, okay? And I love these double bottoms, right? And I look for confluence in the indicators, but these double bottoms play out all the time, and when you catch them, the risk versus reward is pretty good. And you can see we actually had a mini one here too, where we had a bottom there, and then another bottom, and then off to the races, okay? So these ones are really good. Okay, so now that we've done the classical technical analysis, right, we have our targets to the upside, we have our levels to the downside. Now let's go back to the weekly, and I'll see if we can catch anything with the indicators, or if there's nothing to show, then so be it. But let's see if we can see anything else. Okay, so we turn on the high time frame here. Let's turn on the strength and weakness. And sure, we can turn on the bottoms. Okay, so look here. So this last week we actually did have a sign of strength, right, which was followed by the reversal and then a really good showing this week on the weekly bar. So we had a signal right there, but since then we still have been in the breakout, the volatility breakout from the yellow shaded area to the green confirmation breakout signal. We've been in that one. And so far, that's it, guys. That's it. And I do want to also, again, reiterate, just because, I mean, it's the weekly chart is the easiest chart to play for anybody. I mean, no matter what indicators you're using, it's always going to come out a lot smoother on the weekly chart. I mean, as you can see here, the strength signal is up. The squeeze here with the breakout before it even happened. You know, the bottoming signal here, strength signal here. You know, another bottoming signal here. So even if you guys were just patient enough to just play the weeklies, right, it would be a lot more profitable for some of the people that are trying to scalp. But okay, so let's move to the daily real quick, and we can try and get done with Bitcoin here. Nothing as of recent. As I said, guys, we're kind of in this chop zone here, to where everyone knows the line in the sand, right? It's the all-time high here that we're trying to break. And as I said, I can see us having some playing this out for a little bit, you know, gathering some accumulation before you know, this gets the strength to break out. And then lastly, we'll go to the 4-hour and see if there's anything there. And nope, just our our bottoms that I caught here, but nothing as of late. So again, just to wrap this up for Bitcoin before we move on to the SPX and gold. Our target 24,000. That's specifically what I'm looking at. I might even take a little bit of profit there off the table before I try and find another long. Not all my profit, but that is a level that I'm looking at from my upside targets. And again, I think we're going to be stuck in this range between $18,200 and $19,000 before we actually have a springboard to break this 20K. That'd be my my educated guess. Okay, let's jump to the S&P 500. This is the SPX, a weekly chart. You can see here was the recession, if you want to call it that, into the V-shaped recovery. And all of these support and resistance levels are just what we left over from the last markets review. And they've all had confluence with other indicators or fibs. They're pretty good levels. So you can see that this week, we have, again, broken all-time highs, and this is a great spot to be with no overhead resistance on the weekly chart. And then we have, obviously, this was a resistance level, and then this week we tapped it, and then, had a good sign of strength off of the retest. So a good spot to be. This is looking very bullish. In fact, I did enter yesterday and about a week ago as well on the daily. We can look into that, why I did that as well. But these are your levels to the downside, right? And this is pretty strong. So a good risk versus reward. But now let's look at some targets to the upside, and we can do that with fibs again. Let's not go to the let's go to the recent swing low. Let's not be too greedy, and let's go ahead and draw some horizontal rays. We'll draw one there, and we'll draw one there. And these are my next two targets, guys. We've got a target here at 3,800, and then the next one at 4,000. And that is what I'm looking at. That's the next targets I'm looking at. Again, on my positions, I believe I did look at the weekly, and I did set my stops to just below the weeklies is how I like to play them on the legacy markets. Now, switching to the daily, okay, let's take off these fibs and clean it up. Okay, switching to the daily. The same thing, right? We broke above it, retested, and had a good reaction, had another retest here and a good reaction, right? So let's go ahead and look why I actually went long and figure that out. I can get some more clues as to what's happening here. Okay, so exactly. So it's going through a squeeze, and this is why I went long, because if you look beforehand how it's reacted to the squeezes, it's gone into a squeeze, and then we've had the green breakout signals, and off to the races we went. Same thing with the bottoms, right? It's been reacting really well to the bottoms. We had two over here and into a squeeze, and I'm actually playing this ahead of time. I'm expecting a breakout to the upside of the squeeze, and that's why I believe I went long yesterday, and I also went long. Let's see, where was it? I believe it was a double bottom. Oh, right here. This double bottom right here. I can't remember if I got into this bar or this bar, but irrelevant. I'm still bullish on this. Again, my target to the upside is here. I believe now I raised my stops to, I think it was on the weekly, so it was just right here at around the $3,500 level, $3,530 level. So we're bullish here, and let's switch to the 4-hour, and I'm sure it'll show another squeeze, unless nothing comes up. Oh, there you go. Okay, so we got a squeeze here, and it's already started breaking out to the upside, guys. So again, very bullish on SPX. Did take some leverage positions on the SPX, and we're looking good. If you're just getting into this, again, it's still a good risk versus reward. I'm liking this no resistance to the upside, and then setting fib targets. Very bullish, and again, you can always set your stop loss to below the week's low or even below the last resistance if you're just getting in now and you don't want to get shaken out. But looking pretty good. So overall, still bullish on Bitcoin, still bullish on SPX, and let's see if my mind has changed on gold, because last time I wasn't ready to pull the trigger. So let's see what we got coming up. Okay, jumping to gold here. We have the daily chart and we have our resistance and our support levels that we drew last time and found confluence in. Okay, so I've left those on the chart, and I believe last week we were right about here. I wanted to get long gold, but I just couldn't find a setup, and I thought we were in no man's land. And sure enough, the next day we had a big indecisive day with wicks to the upside and the downside. Now, I believe I did get long here, and I posted it on Twitter, and you can see why I did that, because we finally broke this resistance here, and I believe that we had a breakout here, or a weakness signal to the downside, which we can check here in a minute. But going forward, I do believe the next target here is 174 on GLD to the upside on gold, and you know, good risk versus reward, or how I played mine obviously is, you know, I set my stops below the last the last low point. So below this wick low here is where I set my stops, and then I obviously raise them as I go. So again, still bullish to the upside, but there are a few firms calling for another 10 to 15% correction. I believe Deutsche Bank call for a 15% correction in gold still. So I'm being cautious, got my stop set, but I am still bullish. I do have a long position, and again, I would like to see us break out of this level, and then once we've broken out of this level, there's another resistance like right here, but it's not too strong. I believe that if we can make it through the 175 level on GLD, that we're going to be our next target is the 184 level, and I believe that'll be a hard one to break if we get there. Okay, and if we just had to go and look and put on the little indicators here and see what we've got. Okay, so that's why I felt we were in no man's land, because we had a weakness signal just before that, right? So obviously I couldn't buy that. We finished off with a 8 and 9 signal, a green 8 and 9 signal over here, meaning that we've had 8 bars to the downside, and it normally signals it's a good chance of reversal after that. So again, once I saw the close above the resistance, that was my long signal, especially with a stop below the last whatever week's low. So looking forward, guys, again, just to recap, bullish Bitcoin, bullish SPX, and it looks like I'm finally bullish on gold as well, but still being a bit cautious on gold, expecting some consolidation in Bitcoin, and I'm bullish on SPX. So that wraps it up, guys. Thanks for listening to me. And also, before you go, please be sure to go check out our sponsor for being awesome enough to allow me to do this, PrimeXBT.com. Go check them out, guys. Thank you.